A very good morning. EURUSD has started to make slightly of a retrace after pushing back in towards the high yesterday. I was looking for potential for the downside to then go long, but as we can see from that 1 hour internal high here that we had, we didn't see any bearish confirmation at all. Now, again, I get a lot of questions. Fabio, are you looking for longs? Are you looking for shorts? Guys, the plan is very simple. When we have a valid overall setup, we take the position regardless of all other confluences. Now, what we can see here on EURUSD is that the overall daily time frame remains bullish, right? We've had the overall impulse up, we've had the overall retracement down, and then we had the overall internal structural shift occur. Impulse up, overall retracement phase, and now we're looking for the next overall impulse up. We've taken out 2 points of major liquidity, and we've seen a daily change of character. So within this area of daily demand, obviously we can expect the next leg up. Now, as I mentioned in yesterday's video, we retraced into daily demand, so we could have expected already the next push up to occur. However, on the 4-hour time frame, personally, I was waiting for an overall liquidity low to get taken, preferably the liquidity low underneath this bearish candle here. That still pretty much remains, even though we do have an area of 4-hour demand now situated here, which indeed could push the market up higher. So you could already take an initial entry, try and get in on the overall momentum from this area of demand, sell down before the buy up. Though the highest confluence play will always come once we take out main 4-hour liquidity, which is situated over here, and then look for the overall long position back in towards the highs, as you will still be inside daily bullish order flow, inside daily demand, and the daily fractal structure, which is from this low in towards this high, will still be intact. So not looking for any shorts at all on EURUSD. As I mentioned yesterday, the only short that could play out, or let's say the only short that we wanted to play out but that we were not going to take, was from this internal high here to kind of like see this supply zone push the market towards our liquidity low. Though you can see that when we took out that liquidity high, there was no bearish confirmation at all. So then there's definitely no reason to get in or to wait for those shorts to happen. Now, as we can see, again, demand on the 4-hour time frame, and yeah, who knows, we can see that next push up higher from here, or if the market retraces in towards our 4-hour liquidity points, then from there we will be looking for the higher overall probability long position. Now, using this strategy, guys, we can see that there's a lot of uncertainty surrounding the dollar throughout this entire, let's say, month, 2 months. We can clearly see that as time developed, the overall narrative on the dollar index is becoming more and more consolidative. We've seen a very clear overall descending pattern form here at the time over last summer, where we had a descending overall channel, where we then also faked out on the second low over here, which then caused the reversal at the time, which we caught beautifully. The order flow at the time was extremely and incredible clear. However, ever since we've then seen a sweep of the high of the range, yeah, price action has more developed just into slow sideways price action. So there's not a problem with that, but that just makes trading in itself and more in general slightly more difficult as the market moves sideways. Therefore, my own focus hasn't been mainly on the dollar pairs, guys, as for me, it is going up, it's going down, it's going up, it's going down. As we can see, especially in recent times here, it's just more consolidative. However, using the strategy itself with my main focus also being on, for example, yen pairs, again, this month I have done 3.1% in returns. So this is obviously one of the many accounts that I trade on, but you can see that in November, we did around 3.8%. And then in December, no payout. I did 0%, just break even, not really taking any trades as I didn't see a lot of opportunity. And then here in January again, 3.1%, mainly thanks to positions on, for example, a euro-yen long position. Now, as you can see at the time, I was saying I was keeping an eye on this overall long position here, and Swiss yen as well. We clearly had an area of demand plus the liquidity low. And as we can now see from the overall moves on those pairs, if we look at euro yen, well, I mean, it's obviously very clear what happened at the time from that point of liquidity. Also, if you look at Swiss yen, we can also see a massive move in towards the highs from that point of liquidity. So my main focus has mainly been on those pairs, as the overall narrative is a lot more clear and the overall price action as well is a lot more clear. Now, the main pair that I got a lot of questions about was GBPUSD. Fabio, you were looking for shorts on GBPUSD. Yes, guys, I was looking for a short on GBPUSD despite the fact that I was looking for longs on EURUSD. Sometimes when you have a valid setup, you just need to go for it because there's no guarantee that EURUSD will move up higher. There was no long setup for myself on EURUSD. So what did I do? I focused on the GU setup where we had a clear bearish trend, break up, break down, and then we had a breakdown. the first time over here on the final point of liquidity, we saw the beautiful sell-off in towards the downside. And now once again, after the breaker structure down, swing high, swing low, final point of liquidity. We take out that liquidity. We saw the overall daily change of character. And there was also a beautiful initial move, but just no momentum to continue pushing down in towards the lows. And therefore, my main focus has now shifted away again from GU, because what did I do? I took a short position on GBPUSD on the 4-hour time frame. From around this area here. I had initially put my stop loss here, so I would have still been in. However, I then managed the position as I didn't like what indeed EU was doing. Still understanding that relatively we could still go, as here again we saw 4-hour BOS down, swing high, swing low, internal liquidity. Then here the 4-hour change of character in towards the downside. But yeah, price action just didn't play out this time, which is perfectly fine. And then I take a 0.5 loss. I don't really care, guys, because there's enough situations in where these kind of setups will indeed play out, and EU will then not respect its overall market structure and just hit its stop loss. Now, for GBPUSD, I'm staying out of this until we see more momentum, because for now, again, the overall daily demand zone here is now in control, and this could just push up the market up higher in towards this overall supply zone. So at the moment, it is indeed looking a little bit more bullish than bearish, again, after seeing the bullish shift in overall structure. So I'll just be focusing on the extreme area of supply, and then from there, if we see a daily change of character, then I'll be looking for short positions once again. Other than that, EURUSD also remains the main focus here, where I'll be looking for long positions if we do get the overall setup that we are looking for. Then going into AUDUSD, AUDUSD has continued its overall leg in towards the highs again yesterday. No real retracements on this thing. As we can see at the moment, another breaker structure up, meaning that the overall swing is now pretty much from this low in towards this high. We'll be looking for an overall retracement in the near future. We have a lot of liquidity points on the way up, underneath here, underneath here, underneath here, and underneath here. So what we'll be looking for is, simply said, just a liquidity sweep to then look for further long positions in the near future. As simple as that, pretty much. At the current price action, or current momentum, or at the current moment, there's not really a setup to take. We have reached pretty much an area of daily supply here to the left, so that could facilitate an overall retracement in the near future. This is the buy up before the sell down, and then if we extend that zone to the right, that is obviously your daily supply zone. This daily supply zone also took out liquidity here to the left, so we can from there see a potential retracement happen in the near future, in my opinion. Though I like focusing on just trading pro trend, so I'll just be waiting for the overall pullback to then look for potential new long positions. USD relatively similar to AU, though this one has not yet reached its daily supply zone, which is situated here. So there is still a little bit upside potential for this. Obviously, I'm looking and only looking for longs, and we'll need a retracement, a sizable retracement into 4-hour liquidity points. So where's the main liquidity point? Let's say over here. So we're just looking for a retracement into those levels, and then some slowdown, some corrective price action, to then look for potential longs in towards that daily supply zone again. Then moving on into USDCAD. USDCAD sold off further after taking out that internal liquidity high over here, and we can still expect further downside as long as that daily fractal structure keeps on holding. This is the daily supply zone over here. It's still open, so there is still potential for it to retrace in towards there before heading off. But the 4-hour time frame also, for now, still remains more bearish than bullish. If we look at the 4-hour market structure, we had a breakdown, we had a breakdown, we had a break up, we had a break up, we had a breakdown. So overall, our focus just still remains on looking for further downside on this pair. If we also look at the daily time frame, we can see that at the moment the daily time frame seems to want to head down lower as well, where we've had the market structure shift happen. We've taken out internal liquidity, and we also retraced to the 0.5 fib retracement level. After seeing a daily change of character, then obviously we just want to follow that momentum in towards the downside. USDCHF, we can see it yesterday with another bearish daily candle close. The market structure remains relatively the same, though, as I've said many times, this pair is extremely consolidative, so it's not my personal main focus at the moment. Still swing bearish, though, and we took out some daily internal, and this daily supply zone was apparently enough to push the market down lower. We retrace into the overall buy before the sell here. So ultimately, we would expect for another lower low to be created in the near future, especially if it escalates in Iran. So keep an eye on the news. What's the situation with the warships being sent by Trump to Iran? What's going to happen on that side of things? USDCHF could sell off further. Then we have USDJPY. So last night we had the Central Bank of Japan speak. That's why the volatility is here on USDJPY. We finally took out that liquidity load, which I marked out for quite some time. The speech itself, I will give an update inside Discord, but the speech itself was relatively dovish from what I understand. USDJPY still has potential to push up a little bit higher. Do keep an eye on 160. This is a key level of intervention. But overall, the yen pairs obviously need to kind of like, redevelop a little bit, because these kind of candlesticks, wick everybody out, both long and short. So let's wait and see what the next candlesticks will be. But overall, obviously, we're still short on the Japanese yen until currency intervention takes place, because then we can expect a massive sell-off in towards the downside. I'll see if in the speech I can find any hints on currency intervention. And then last for gold, I was relatively expecting gold to slow down quite a bit yesterday. However, with the tensions now with Iran picking up again, gold saw another breakout in towards the highs. On the 1 hour time frame, we didn't drop as deep as I wanted. I would have loved to drop a little bit deeper, but then again, if you look at what price action did, this was then a point of liquidity. And then once the 1 hour change of character came, you could have pretty much anticipated on the fact that the next breakout was going to take place. On the 50-minute time frame, it's a little bit more clear that that was liquidity. And overall, just another nice push up. Now, it's likely that we'll reach 5,000, so just keep an eye on this area of demand for now. And we're now liquidating a low here, by the way, especially if you look at the 15-minute time frame. So from this low, maybe even this low, we can look for new sustainable longs back in towards the upside. Though, holding onto those gold longs is becoming riskier and riskier. But as long as, again, as those tensions surrounding Iran do persist, keep an eye on it. And gold can push up higher. Now, for the rest of the next week, what I'll be looking at is, again, mainly the yen pairs. Until currency intervention takes place, I'm still long on those, XXX JPY pairs. And that will hold my main focus. And we'll keep an eye out if we do get any nice potential setups on your USD longs. So that's it for today, guys. Thanks so much for tuning in. Wish you all a fantastic weekend, and speak soon.